Another day, another story. Hello and welcome to our channel where we provide you with tips, tricks, and advice on how to become a millionaire. Today we are going to talk about a topic that has been on everyone's mind. How to become a millionaire using Bitcoin. Part 1. Understanding Bitcoin. Before we dive into the specifics, let's first understand what Bitcoin is. Bitcoin is a decentralized digital currency that allows people to send and receive money without the need for a central authority like a bank. The technology behind Bitcoin is called blockchain, which is a decentralized ledger that records all Bitcoin transactions. Bitcoin was created in 2009 by an unknown person or group of people using the pseudonym Satoshi Nakamoto. The idea behind Bitcoin was to create a currency that is not controlled by any central authority, and that can be used globally without the need for intermediaries. One of the main advantages of Bitcoin is that it is a decentralized currency, which means that it is not controlled by any government or central authority. This makes it immune to government interference, manipulation, or inflation. Additionally, Bitcoin transactions are fast, secure, and transparent, which makes it a popular choice for people who want to send and receive money without the need for intermediaries. Part 2. Investing in Bitcoin. Now that we understand what Bitcoin is, let's talk about how to invest in it. Investing in Bitcoin can be a great way to build wealth over time. The first step is to set up a Bitcoin wallet. A Bitcoin wallet is a software application that allows you to store, send, and receive Bitcoin. There are different types of Bitcoin wallets, such as desktop wallets, mobile wallets, and hardware wallets. Desktop wallets are software applications that you download and install on your computer. Mobile wallets are apps that you download on your smartphone. Hardware wallets are physical devices that you can use to store your Bitcoin offline. Once you have set up your Bitcoin wallet, the next step is to purchase Bitcoin. You can purchase Bitcoin on various cryptocurrency exchanges like Coinbase, Binance, and Kraken. When purchasing Bitcoin, it is important to do your research and choose a reputable exchange. It is also important to invest only what you can afford to lose. When investing in Bitcoin, there are different strategies that you can use, such as dollar cost averaging, lump sum investing, or swing trading. Dollar cost averaging is a strategy where you invest a fixed amount of money at regular intervals, regardless of the price of Bitcoin. This strategy helps you avoid buying Bitcoin at a high price and can help you reduce the impact of price volatility. Lump sum investing is a strategy where you invest a large amount of money at once. This strategy can be riskier than dollar cost averaging, but it can also lead to higher returns if the price of Bitcoin increases significantly. Swing trading is a strategy where you buy and sell Bitcoin based on short-term price movements. This strategy requires a solid understanding of technical analysis and trading strategies and can be risky for beginners. Part 3. Hodling Bitcoin. Now that you have purchased Bitcoin, the next step is to HODL, hold on for dear life, it. Hodling is a strategy where you hold your Bitcoin for the long term, regardless of short-term price fluctuations. The value of Bitcoin can be volatile, and it can fluctuate significantly in a short period of time. However, historically Bitcoin has shown to appreciate in value over time. The key is to be patient and not panic during short-term price fluctuations. One of the main advantages of hodling Bitcoin is that it requires less time and effort than trading. Trading requires constant monitoring of the market and making quick decisions based on market trends and news, which can be stressful and time-consuming. Hodling, on the other hand, is a passive strategy that requires less attention and can help you avoid emotional and impulsive decisions. Another advantage of hodling is that it can help you avoid taxes. If you sell your Bitcoin within a year of purchasing it, you may be subject to short-term capital gains tax, which can be as high as 37%. However, if you hold your Bitcoin for more than a year, you may be subject to long-term capital gains tax, which is typically lower than short-term capital gains tax. Part 4. Diversifying your portfolio. While Bitcoin can be a great investment, it is important to diversify your portfolio. Diversification means investing in different asset classes to spread your risk and reduce the impact of market volatility. Some asset classes that you can consider investing in include stocks, bonds, real estate, and commodities. Each asset class has its own risk and return characteristics, and by diversifying your portfolio, you can minimize your overall risk. When diversifying your portfolio, it is important to consider your investment goals, risk tolerance, and time horizon. If you are a young investor with a high risk tolerance, you may want to invest more aggressively in high risk, high reward assets like stocks and cryptocurrencies. However, if you are closer to retirement and have a lower risk tolerance, you may want to invest more conservatively in bonds and real estate. Part 5. Avoiding scams and risks. While Bitcoin can be a lucrative investment, it is important to be aware of scams and risks associated with it. One of the biggest risks of investing in Bitcoin is its volatility. The value of Bitcoin can fluctuate significantly in a short period of time, and there is no guarantee that it will appreciate in value over time. Another risk is the lack of regulation. Bitcoin is not regulated by any government or central authority, which makes it more susceptible to fraud and scams. There have been numerous cases of cryptocurrency scams and hacks, and it is important to do your research and choose a reputable exchange or wallet provider. To avoid scams and risks, it is important to educate yourself about Bitcoin and its underlying technology. You should also do your research and choose a reputable exchange or wallet provider. It is also important to keep your Bitcoin safe by using strong passwords and two-factor authentication. Conclusion. In conclusion, investing in Bitcoin can be a great way to build wealth over time. However, it is important to understand the risks and do your research before investing. By setting up a Bitcoin wallet, purchasing Bitcoin, hodling it, diversifying your portfolio, and avoiding scams and risks, you can increase your chances of becoming a millionaire using Bitcoin. Thank you for watching, and we hope you found this video helpful.